It's Forex Focus, brought to you by IG. Today, taking a look at some historic price action in the Forex market, especially in this dollar-yen pair, hitting 155 for the first time in 30 plus years, ahead of numerous economic events to come, including a Bank of Japan meeting on Thursday night. Let's take a look at what happened. We saw some increased volatility this morning and throughout the day here midweek in this dollar-yen pair, not coming off of any specific event, on a lot of speculation in anticipation of these events to come. You can see these candles with rather long tails looking at the 15-minute chart, so you know that these prices didn't hold very long at all. But first, early in the morning, around 8 a.m. Central Time, or 8 a.m. Eastern Time, we saw the dollar-yen hit 155 for the first time, reverse back immediately, and then also some crazy swings to the downside before continuing to step higher throughout the day and start to settle in above that 155 level. And this is ahead of the Bank of Japan meeting tomorrow night. We're seeing an increase in market participants, a few reports saying an increased demand in contracts selling the yen against the dollar, against the euro, as well as some high notional contracts, particularly one $300 million options contract selling this dollar yen at the 156 level in the next month. So a lot of speculation going on today, as well as some price action in Treasury yields. In the bond market today, we had a rather large bond auction, and corresponding with higher yields across the Treasury curve. Here, taking a look at the 10-year yield back near year-to-date highs dating back to last fall, right under that 4.7 threshold. Yesterday, it looked like bonds yields were starting to come back lower, but now ticking higher, perhaps through these year-to-date highs. And this is interesting when talking about the yen, because among Forex pairs, the dollar-yen has the strongest negative correlation to these Treasury yields, a near negative 0.5 correlation in the 10-year against the dollar-yen. And so that could speak to why there's an outsized effect today in the dollar-yen, as well as you're seeing this historical correlation over the past 12 months pan out. But it's not just a US dollar story, because euro-yen is also near all-time highs, through year-to-date highs dating all the way back to 2008 at this current 166 level. But right there at 170 is the all-time high since IG started tracking price history data for this pair. And so that's causing, this combined with the US dollar story, is causing traders and markets to speculate whether the BOJ will speak to this at tomorrow's meeting, whether they'll take any action concerning their devaluing currency, and why everyone has this kind of historical context as it particularly pertains to the Bank of Japan is because here, looking at the dollar yen, highlighted price action in 2022 is the last time that the Bank of Japan actually did intervene. And how can they intervene? We know that central banks are related to these, are central, honestly, to these exchange rates, because they control the overnight interest rates, thereby playing out in the demand and the yield for holding these currencies. But in 2022, we actually saw the Bank of Japan step into Forex markets themselves and start selling some foreign currencies and buying back the yen in an attempt to stabilize the Japanese yen. And they actually did so. That was up around the 150 handle. I think in 3 separate instances they purchased back yen, and they actually did see a stabilization in the dollar-yen exchange rate. And so traders were wondering that earlier this year when we passed 150, when we passed 151, we passed 154, and now 155 kind of feels like that storm is coming to perfect conditions, especially taking into account the euro as well. Just when they'll step in, because when we're looking at the dollar, we've seen continued dollar strength, and how much longer can Japan afford to have the yen keep devaluing at this rate if U.S. data keeps pushing forward. And in addition to the Bank of Japan meeting on Thursday, we have more U.S. data that could tip the scales in either direction, but the story so far in 2024 has been of U.S. growth. We have on Thursday morning GDP growth, our first look at Q1 2024 GDP growth, coming off of 3.4% growth in Q4 of last year. This Q1 data should come in the 2 handle, but higher than we've seen in the first 2 quarters of 2023. So that'll be interesting to see if we are still seeing some robust strength coming into this year, as we've seen in the monthly figures from employment and inflation and what have you. But that has the potential to move the U.S. dollar higher, and it's likely that will bleed into the yen currency pair as well. And then Friday morning, PCE inflation data, the Fed's preferred inflation gauge, and looking to that especially because March CPI data, the other inflation metric here in the U.S., came in hotter than expected for March. So could PCE, that tracks a slightly different basket of goods, also come in hotter than expected? Then we could see that U.S. dollar appreciate more, sending dollar-yen through new highs if the Bank of Japan doesn't do anything at Thursday night's meeting. But just the opposite is true. All this inflation data, this GDP data, could come in weaker than expected, and we could start finally seeing the effects of these 5.5% interest rates on the U.S. economy and start to see some of that cool down that the Fed has been hoping for since the start of the year in order to begin cutting rates. We'll see what happens, but definitely an interesting story coming up. We'll see what the Bank of Japan does. We'll see where this dollar-yen currency pair goes, and we'll keep an eye on all these economic data releases and price action throughout the week. Thanks for watching.